This is an interesting update from the latest numbers from the BIS. We're looking at real home prices, and it telegraphs a story which is fascinating. And this is applicable to the real estate cycle, the Kuznets cycle, 18-year real estate cycle. So let's go through it very quickly and look at the data. Now you can see here that I'm going to run through some countries in the world in a second, but you can see that we've had this blow off in Australia. As you can see, as with a lot of countries, most of real estate, real home prices since the breakdown of Bretton Woods was pretty constant. There wasn't much fluctuation. And then something happened in the late 1990s that sent real estate prices around the world into the stratosphere. And obviously, here at the long wave, it's the price of credit. It went to zero, and we had the blow off in 2021 and 2022. Now we can see Canada, the same thing. You see it went sideways. And what's interesting, again, if you just look at the trend line, we went sideways for about 15 years. We had that blow off into 89. I know from personal experience. Then there was a secular bear market until 2001. And then we saw this rise from 2001 just outside of the norms. And the reason why it's outside of the norms is real incomes have been stagnant since the early 1980s. So this is all Ponzi wealth. I know a lot of people don't want to hear that, but that's the reality, right? This is the long way form. We're here to understand profit and avoid economic disaster. We can see the same thing in New Zealand, right? Just, you had these stable real prices. Then around 2000, the whole world went completely mad, and the blow off again in the first quarter of 2022. Now, Italy has a different story. These are real home prices again, right? So adjusted for inflation, and you can see it's been in a secular decline since the peak in 2007. So there's one country, but interestingly, it has a lot of data going back to actually the beginning of the long wave, and you can see prices here were pretty stable until the breakdown of Bretton Woods had its first bubble, as with most of the world up until 89. Then again, 1996 and its rise. So it's interesting. UK, almost like a double top here. Again, if we take a look at the cycles, it had its peak in 1989. I'm going to update that in the future. But again, you see the mid-1990s. There's this phenomenon around the world that real estate prices went up dramatically. Now, if you look at the U.S., it looks like it had a massive blow off. We know the crisis. And again, it's incomes. That's why we're focusing on this. Here I did highlight, peaks and troughs in real estate after its peak in 2006, bottom 2011, and then it had a blow off like most other countries into the first quarter of 2022. So this is fascinating. Same thing with the Euro area. We're looking at, is this just occurring in one country? But you can see again, 1996, again, real home prices just started to deviate from the long-term trend. Now, this is all the advanced economies, and the data from the BIS only starts in 2007. But it's interesting, again, if we look at the data. Now, Australia and Canada did buck the trend, so to speak. But you can see the bottom there in 2012. That was really the advent of just negative interest rates because the crisis that was occurring in Europe. And I didn't draw a trend line here, but it's breaking. Again, the first quarter of 2022. So we can see this is not just happening in a couple countries. Now, this is the most interesting one. They have the world data. So what I did here from 2011, and this is really the era of record low, 5,000-year low interest rates, and it just caused Ponzi finance. You can see the rise since that period of time. This is global, and it peaked in the first quarter. So it's not exclusive just to one or two countries. Now, this is the fascinating part of the story. We all know Japan had a massive real estate bubble in 1989. It collapsed, caused a banking crisis, and Japan, up until recently, it's been fighting deflation. Not that it's so bad, because if you go to Japan, things are reasonable, right? Prices are reasonable, standard of living is great. There's no asset bubbles, unlike most of the developed world. Take a look at this chart. Again, this is real, adjusted for inflation. And you can see here, there is the peak there in 1991. And notice the trough there in 2009, which erased all the monetary gains. So again, remember I allude a lot to the monetary wave, in that it's a false growth in terms of prices because it's predicated on credit, not income. Look at Japan. What's fascinating about Japan? Since 2009, its population's been shrinking, but since then, real estate prices are moving up higher. Now, what does that do to the thesis about immigration and population growth? It just destroys it. Yes, it's important, but what drives prices is affordability. You know, in between 1946 and 1971, if you look at the data, what is interesting, a single wage earner, this is the beginning of the long wave, with a high school education, could own a home, raise a family, have a vacation, and save for retirement, right? This is where the cycle bottomed. And if you are working and saving, this would make sense that that's the type of lifestyle you should have. So we can see all this. It's completely ridiculous in most places that, you need two income earners and high incomes and record low credit. It's all Ponzi finance. So again, the most important aspect about all of this is that you can see the real estate cycle has peaked. Now, I know some people allude to the 18-year cycle, but I focus on the Kuznets, most of it, and other leading indicators. So we do have a coincidence of the economic long wave, the Kuznets or real estate cycle. It's an 18 to 25 years cycle. It's demographically influenced, of course. Other things can influence, and the most important from a long wave perspective is the price of credit. And why we're seeing the correction in real estate, it's the most important indicator. It's not demographics. It's since the income is not there. What most people have done is use the price of credit to leverage, which has caused these Ponzi credit bubbles. And they're all reversing. There might be a couple countries, but as you can see, Japan's the exception because it had its bubble and collapse, right? There is Japan since 2009, and we go back to the world, or the advance and the euro, right? They're all correcting, where you see new highs in the Japanese market. So, interesting. We learned something today. We learned the real estate cycle has peaked, or the Kuznets cycle. Can we have one leg up? Highly unlikely because interest rates are moving up, but we're going to watch into the business cycle peak of 2024. Quarterly, I'll be updating all this. This is the most important. The reality is real home prices have peaked in the first quarter of 2022. And they're in a secular downtrend because it's the demographics and rising interest rates that is putting the pressure now on real estate prices to the downside. Hope this makes sense. Again, if you have any questions. Oh, by the way, I can't get specific, right? As I said before, I'm no longer an advisor. But if you want have access to what to do, a satellite view of the markets from a Canadian perspective, of course, you can subscribe to the Substack account. My website will be including, now I'm getting into a rhythm. The website will really focus on all aspects of the long wave, of course, right? The markets, the real estate, the political cycle, the economy, of course, the technological revolution, Schumpeter, what's coming, what's going to cause the next upwave, right? We need to have economic winter before we can have economic spring. So if you want to have access to the model and more specific, it has to be consistent, since I'm not an advisor, right? I can't give you financial advice, but I can give you access to the model. And what is the model telegraphing? I built this, as I alluded to, during the 23 years I was a financial advisor, and I went through a real estate bubble and I went through 2 stock market bubbles. Really, to manage wealth properly, you have to experience deflation in those assets to understand. The majority of people, and those under 50, they've never experienced the bear market in real estate. Now, this is going to be a new phenomenon for these people. Anyways, I hope you find this informative. Don't forget to follow and like. And this format is working. People are liking the short, informative red pill and use slowly, right? The long wave is a complicated insight. You can go to the resources on my website if you want to learn for yourself, but I'll be doing that. I'll educate people exactly. And remember, what I'm doing differently is I've taken all the best of the long wave, taken the books, the social impact, the technological impact, the markets, the economy, the demographics, right? Different people and researchers have focused on one area of the long wave. I just find it fascinating. That's why I'm doing this, and interesting, not because I'm interested in economics. I'm interested in how things work. And so what I've learned in the secret of the contractive cycle is it's simply why I've come into this forecasting business. It's really simple in my eyes, but I'm trying to simplify it as much as possible. Anyway, so that's where you can find the information. And as always, we will talk soon.